Thursday, November 2nd, 2023, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at why, in my opinion, keeping too many of your assets in the financial system is actually the biggest risk right now. Yet price movements, crashes, to me, don't really matter. It's a matter of currency survival. I think the currencies are in trouble, not just the dollar, all fiat currencies. And that's what we're going to talk about today. Before I do, I like to give a shout out to Dan from Ohio. Howard at the Dirty Man Safe wanted to thank Dan for buying quite a few of the safes using not just my promo code Maneco10, but also Rafi's. Rafi's also an affiliate with the Dirty Man Safe. And for those of you who don't know, yeah, the promo code there is Maneco10. You get a 10% discount. And especially with what I'm going to talk about, I think it's more important than ever to have some kind of mechanism to keep your treasured possessions safe. And Howard from the Dirty Man Safe, he's arranged to be able to ship to the UK and Canada. Hopefully he'll be able to ship elsewhere soon as well. Rudy and I got really wet this morning, but Rudy's a trooper. Despite the rain, we went out there. We faced the elements, and he did what he had to do. And now he's home and dry, and so am I. So, yeah, having too many assets in the financial system. And it's not just to do with the currency situation, but also to do, I think, with counterparty risk. And as per the currency situation, I'm going to read you a headline here that I've seen from yesterday in Business Insider, and I'm going to put a link to the article in the description. You can read the whole thing. I'm not going to go through the whole thing, but it says the Japanese yen's underlying forces are so weak, the currency is in the same league as the Argentine peso and Turkish lira, the Deutsche Bank says. So for one of these major banks to say this, and I know Deutsche Bank has been a zombie bank, but be as it may, I think they're catching up to what I've been saying for many years. And it's not just going to be the Japanese yen that is going to emulate the Argentine peso or the Turkish lira. It's going to be all major Western currencies. We are not exceptional. We are not exceptional, and we can't do things that are totally crazy and get away with it. And what do I mean by that? Well, printing money, borrowing like crazy, and continuing to print. We can't do it, and we're already seeing the consequences of it. And that's why I think the bankers are cracking down on the average person. And I saw a tweet, and this is why I wanted to talk about the risk of having too many assets in the financial system, especially if you are fortunate enough to have substantial fiat currency balances with your bank. I think that they will be in danger. And I follow Ben Rickert. It's not the real Ben Rickert, of course, but I followed him for quite a few years. He's got 52,000 followers on Twitter or X. I've actually been in contact with him. I can't say more about Ben Rickert, but suffice it to say he works for one of the big banks, one of the big New York banks. He tweeted yesterday, the man on the street is starting to wake up. It's not long now until collective flock of sheep start to panic. And he posts, I'm not going to play this, but is an Australian gentleman talking about how it's getting harder and harder to get your money out of the banks. It's getting harder even when you sell, for example, your house or your property, and you put the cash in the bank. They're coming after that. Even they're even questioning, where's the money from? They're not allowing you to move the money. And I remember when I last moved houses in 2015. Even then, I had an account with Citibank. I don't anymore, but I had a pretty big balance there from the sale of my house. I bought another house, of course, but there was money left over, and they kept nagging me every 3 months saying, where's this money from? And I kept telling them and showing them documents that I had sold my previous home. And why are they doing this? Well, because
with rising inflation, bank failures, and massive layoffs across multiple sectors, the future of the economy remains uncertain. It's no wonder the central banks have been getting prepared by stockpiling gold. At ITM Trading, we have spent over 27 years building a team of seasoned researchers and analysts who can help you prepare for any financial crisis. Our experts are ready to provide you with proven strategies to safeguard your wealth and assets in the event of an economic downturn or currency reset, which is frankly inevitable. Don't wait until it's too late. Schedule your free gold and silver strategy call by clicking on the link in the description below.
First of all, the banks are in trouble, so they don't want you taking cash out and keeping it outside the system. They're making it, of course, harder and harder for you to spend that cash, especially when you want to buy alternative assets. And here I'm even going to add Bitcoin and cryptos. Some banks in the UK have banned people from doing that. When you buy gold, they can be quite difficult, but you can still do it. So why is it so dangerous to keep a lot of assets in the financial system, not just in the banking system? Well, I spoke over a month ago or so about a new book called The Great Taking by a former hedge fund manager, or very successful hedge fund manager, David Rogers Webb. And he says all the rules, all the laws, the regulations are in the books to be able not to just bail your bank in, bail your bank accounts in, but bail also your securities. What does securities mean? Well, it means stocks, bonds, ETF, anything like that. And why would they do that? Well, because the banks are in trouble. The bank's assets are diminishing in value. They've held a lot of bonds, and bonds have been a disaster for the last 2 years. So their hope, of course, is that interest rates and yields will go back down, which I think is wishful thinking. Yes, yields have come off in the last 24, 48 hours, but I think we're in an environment where you sell the rallies in bond prices. And we are in a long-term bear market in bonds, and that's going to make it even harder and harder for banks to stay solvent. We're seeing that the central banks, which are really the granddaddies of the banks emulate what the central banks do, as you know, per their balance sheets. They hold treasuries, they hold bonds, they hold agency bonds. We've seen that the Central Bank of Sweden needs a bailout. The Fed doesn't need one because it can just ignore the huge losses it has. The UK taxpayer is sending billions to the Bank of England to pay for its losses because of QE. So one day, just like in Brazil, like it used to happen where I used to live in the 80s, you're going to wake up and the balance that you thought you had in the bank will not be there anymore, or there will be a new currency that's worth a lot less. And you'll be sorry you didn't get it out before. And how do you get it out? Well, it's up to the individual, of course. I think there's a few alternatives. Number one is to just spend it. Yeah, it sounds crazy, but you just spend it in things that are not, I wouldn't say superfluous or conspicuous spending, but spend it on quality goods, on quality time with your family. Don't leave it there like so it can be bailed in and debased. You can spend it in producing assets, of course. And that's up to you to decide. I'm just giving you the strategy. Or you can also put it into debt assets. And it might sound bad, but they're good assets like gold and silver that hold their purchasing power over thousands of years and don't allow the fluctuation in prices put you off. That's my opinion. As I said earlier in the video, the most important thing in this environment is not whether you're going to make a killing holding a stock or a commodity or anything. It's whether you're going to have possession of that. And this has been spoken about by people like D.R. Schoon or Schoon. He said we'd eventually have the time of the vulture. And I think that's what we're entering. It's a time where just by not losing things, you'll be better off than the great majority of people. And I think that's why having as little as possible, and this of course depends on the individual, in the financial system is the best way forward, because the system is on its last legs. We've got so much debt that the only way to keep going is through even more debt, which will make everything, the currencies become more worth less and less, just like the Japanese yen. Or we could basically implode the whole thing, and that would create massive bankruptcies. Counterparty risk would come to the fore. So that's how I see it. If you are on X or on Twitter, I recommend you follow Ben Rickert. It's at Ben_Rickert. He has some interesting opinions on things, especially in things financial. So before we look at the markets, just a few comments on the Fed. To be honest, I've given up listening to Jay Powell. He's just a bureaucrat. He knows as much as you or I do, really, of what's going to happen. But I don't think he's in the know about the truth about inflation. And I think like most of the people on Wall Street and the mainstream economists and mainstream media pundits, he's hoping that the bond market is going to go back up, that there is no bear market in bonds, and that the rising yields that we've had in the last 2 years is just an aberration. And I think he's going to be proven wrong, but be as it may. What I would say about the Fed is that they're hoping and praying right now. And if any accident were to happen in the financial system, and especially to do with counterparty risk, which Andrei Jakubowicz, who I had on Sunday, said that's going to probably trigger the next move for the Fed to help out. Yeah, they're on the lookout. They're pretending everything is great, pretending the economy is not going to go into a recession. But I saw the Atlanta Fed. They revised their Q4 GDP down to almost 1%. So back to the markets then. It's 8:15 a.m. London time. So we've got spot gold at 1985. It's up about $3. The high's been 88, the low 77. Silver is fighting for the 23 handle. It's up 5 cents, trading at 22.98. The high's been 23.07, low has been 89. The Dow futures up 28 points, NASDAQ is up 77, S&P is up 13. To the currencies, sterling is up slightly, 121.59. The euro is up 0.25% at 105.95. The dollar has come off against the yen, so the yen is right now kind of being saved, or it hasn't gone down further. We're at 150.45. I think the recent high for the dollar was just below that 152 level, which is key. The dollar versus the yuan is unchanged, 733.30. To the other currencies, Aussie dollar, that's up 0.5% at 64.20. So the Aussie dollar is rebounding nicely. The dollar is down slightly versus the Canadian dollar, 138.48. And the Kiwi dollar is also up 0.5%, 58.80. To the commodities, we've got WTI crude up 1.3% at 81.30. Brent is up 1.3 as well, 85.60. Platinum is up $5, trading around 932, and high-grade copper is up 0.75% at 370.58. So let's look at the bond markets, wrap up with the bond markets. As I said, treasuries have rallied, so yields have dropped. We had some weak ISM manufacturing data yesterday. It came out a lot lower than expected for the US. I think that's helped. And also after the FOMC, yields dropped. Right now, the 10-year yield is at 4.74. It's down about 5 basis points. And that's helped the Japanese bond market. That's put a little less pressure on it. Right now it's at 0.91. The high overnight was 0.96. And let's finish off with the UK gilt market. The 2-year yield, gilt yield is at 4.77. It's down about 3 basis points. And the 30-year now is back below 5. It's at 4.97. So even in the bear market in bonds, we will see some rallies. And it doesn't mean to say that yields have topped. It just means that, yeah, it's a correction in the bear market. That's the way I see it. And why do I see that? Why don't I go along with the mainstream that thinks that bonds are a raging buy right now, a massive buy? Well, because we got so much debt coming onto the system, especially from Uncle Sam and other Western governments. And we have the rest of the world trying to get away from buying our debt. So the only way to attract buyers is to pay a higher return. And the only way for returns to be higher is for prices to go down. So there you go. If you enjoyed this video, make sure you hit the like button, make sure you share it. And if you haven't subscribed to my channel, make sure you do as well. And with that, I'm going to wish you all a very good day. Take care. Bye.